Not many names command as much respect in the investing world as Ray Dalio. He founded Bridgewater Associates, the world's largest hedge fund managing over $150 billion of assets at its peak. But what truly sets Dalio apart isn't just his success, it's his obsession with understanding how the economy works. Hi everyone, I'm Petar Petrov, senior analyst at TradingKey. In this video, we will explore the core principles behind Dalio's investing philosophy and how retail investors like you and I can apply this in our own strategies. Before we begin, remember to tap the like button now and let's dive in. Let's start with Dalio's first core principle, diversification. He believes that proper diversification across asset classes, countries, and sectors is the most reliable way to reduce risk without sacrificing returns. At Bridgewater, this principle translates into holding 15 or more low correlation assets to offset volatility, as reflected in his portfolio with consumer staples like Procter & Gamble, bonds like long and mid-term treasuries, commodities, and ETFs. With over 950 positions globally, his goal is clear. No single market event should derail the whole portfolio. This ties closely to Dalio's signature of risk parity, where assets are allocated not just by capital, but by their contribution to the overall risk. The second principle is Dalio's focus on understanding the economy. While Buffett focuses on individual businesses, Dalio focuses on the economy as a whole. His strategies are grounded in macroeconomic cycles and its effects on debt, interest rate, and liquidity. Bridgewater's recent increase in Spider Gold shares signals a hedge against currency depreciation, while position in emerging market and Chinese tech company like Alibaba and Baidu reflects optimism in policy-driven recoveries. Despite the rally in mega-cap tech, reductions in giants like Meta and Nvidia holdings suggest caution amid possible economic slowdown. Dalio emphasizes fundamentals over sentiment. It has never been about chasing trends. Rather, he believes in anticipating shifts before they happen. Dalio's third major principle is the construction of the all-weather portfolio. Dalio's legendary portfolio is designed to perform in any economic climate, and he's not gatekeeping this. The ideal breakdown includes 30% stocks, 40% long-term bonds, 15% mid-term bonds, 7.5% gold, and 7.5% of other commodities. Bridgewater's own allocation mirrored this approach. This enables gains from stocks in growth periods, stability from bonds in recessions, and protection from commodities during inflation. In fact, when the S&P 500 fell by 33% in early 2020, the all-weather portfolio only dropped 6%, and that's the power of balance and discipline. In his book Principles of Life and Work, Dalio wrote,
"Balance risks in ways that keep the big upside while reducing the downside."
His fourth key investing principle is systematic decision-making. Dalio doesn't believe in relying on hunches. He built Bridgewater on an algorithmic system with large amounts of historical and real-time data fed into models that guide his investment decisions, thereby removing emotion from the equation. Rooted in the belief that history repeats itself with slight variations, Dalio consistently studies the past to navigate the present. Now that we have covered Dalio's four core principles, let's welcome Mario, our senior equity analyst.
Thanks, Peter. Let's move on to how these principles work in the real world. While Dalio isn't typically seen as a tech-focused investor, Bridgewater's portfolio tells a different story. Tech firms like Microsoft, Alphabet, Booking Holdings, and Nvidia make up a substantial portion of his holdings. As of Q2 of 2025, over 37% of Bridgewater's assets are parked in tech and semiconductor stocks. The big question here is why? Ultimately, Dalio sees productivity as a key driver of long-term economic growth, and the tech firms are leading the charge. Even during downturns, the foundational nature of major tech players often keeps their operations resilient. One company that stands out in his portfolio is Alibaba. Dalio has long believed in China's ascent as a global powerhouse, and Alibaba offers direct exposure to its consumer and the digital economy. It also adds geographic diversification, which fits perfectly into his risk parity model. Dalio's playbook offers plenty of takeaways. Diversify wisely, understand bigger picture, stay balanced, and most importantly, build systems that keep emotion out of your decisions. Want to track Dalio's latest moves in real time? Check out Star Investors on TradingKey.com and get access to full portfolio breakdowns, detailed sector allocations, 13-app fillings from more than 100 top investors all in one place. If you enjoyed this breakdown, please be sure to like the video, subscribe to our channel, and comment below. We'd love to hear what you think of Dalio's philosophy. Remember to stay informed, and we'll see you next time.